Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, I'm glad to be back.
John, Scandium International kicked off the year with a faceplant. What was that all about?
Well, it was sure a terrible way for one of my favorites to greet the new year. On January 2nd, they put out a news release that the New South Wales Department of Planning and Environment was reviewing the mining lease that it had granted in May of 2017. Now, they're not actually reviewing the mining lease. They're reviewing the process of granting the mining lease. And, of course, a news release like that, the company's in the midst of developing an off-take market for scandium oxide so that it can justify raising $100 million to develop the mine. This is not exactly a great way to greet the new year. So I did a little digging, and it turns out that this problem does not really affect their ability to proceed with development of the Ningen Scandium project. The 800-hectare lease, about a quarter of it is owned by a farmer who had sold to the previous owner of the property. Jervois had sold the other three-quarters way back when, before Scandium International acquired the project from Jervois 100%. And back in May of 2016, when the company filed the environmental impact statement, there was a 30-day comment period where anybody who has an objection can file that objection with the planning department. And a month later, there were no objections, so the department proceeded to grant a development consent in November 2016, which set the stage for granting the mining lease. And the mining lease was granted in May of 2017, and then all of a sudden, the farmer who owned the quarter of the area that's supposed to be covered by the mining lease suddenly said, hey, what about the objection that I had filed? Now, this guy had filed an objection that his land was agricultural land, and it's sort of a marginal farmland, and he's maybe been growing something there, and he had no problem selling the agricultural land next door, a few years earlier, and now he was suddenly concerned about the agricultural land. But for some reason, he didn't notice that his objection was not on the list after the 30-day comment period. He did not notice that the development consent was granted without his objection being addressed. Only when the process was very much advanced did he suddenly come and complain. And the New South Wales Department looked at it and said, well, where is this letter of yours? And obviously there's some sort of registered letter receipt that says something was mailed, but what exactly was in it, who knows what it was. And so they looked for it and couldn't find it, and basically swept it under the carpet, told Scandium International, no, you don't need to do anything, it's okay. And then they signed that lease in September 2017, and everything was on track. Well, over a year later, all of a sudden, somebody finds an envelope stuck in some file somewhere in the department and brings it to the bosses, and they open it up and say, oh, here is this objection letter. So now the New South Wales department has a problem, and they've been trying to fix it, and one of the ways they tried to fix it was to, this actually isn't agricultural land, so your objection was invalid anyways. And about 6-7 weeks ago, Scandium International was notified that this problem that wasn't a problem, was suddenly a new problem, but was told, don't do anything about it. So the department went and retained an independent consultant to assess whether or not this is likely to qualify as agricultural land. And the consultant came back, hell yes, this is agricultural land. There's some stuff growing there. Sure, it can be farmed, even if it's not particularly fertile. So when Scandium International was notified that this was the outcome, they sort of said, well, this is now material. You guys can't keep telling us to back off. And so they put out this press release on January 2nd. And the New South Wales Department is now looking at this whole process of how did they handle it. And obviously they handled it improperly. They should have, when they finally found out there was a problem, they should not have swept it under the carpet. So now they have this situation where they have to solve this, and they can't cancel the mining lease, but they can carve out the agricultural land portion. Now this is where the story becomes interesting, because the mining plan, the first 7 years will mine from the west pit, which is completely within the land where the surface rights are already wholly owned by Scandium International, and the entire resource of 17 million tons sort of straddles both the east and west pit. But there's 200 years of mine life at the 240 ton per day mining rate proposed for the Nyngan operation. So the company has taken the stance, we will, the first 7 years, we will develop this, and by the way, we can change the ore schedule, and we can, instead of having 200 years of mining, we have 100 years of mining, and we will just keep mining from the west pit area, and maybe even get into the saprolite, which is underneath it, which is lower grade, but it's possible that, based on preliminary work we've done, that the metallurgy is not as tough as it is with the limonite resource, which requires an autoclave, hitting it really hard with heat and acid. And so, but at the same time, they would like this solved, but they can't solve it because the New South Wales planning department is trying to solve this on their own, and they're going to fight it, and they can litigate it. So the company's kind of taken the stance, until we're allowed to go to this farmer and negotiate a deal, and it's pretty obvious that the farmer has no desire to actually, keep this land as agricultural land in perpetuity, because it's a small fraction of the land that he already owns in the area, and he already sold a much bigger piece to Nyngan for development as a mine. So some deal will eventually be worked out, but for the market, this was not the way to greet the new year. On the plus side, this lump of coal has a silver lining, because there is the Honeybugle project 20 kilometers away, where they know they have something similar, could even be better, and it needs to be delineated. So what the company now ought to consider is, that when we raise the next round of money ahead of the construction financing, let's allocate some of that to drill off Honeybugle, put out a resource using the new borate fusion method, which gives a more reliable assessment of scandium content in the rock, and maybe also earmark some money for more formal studies on the metallurgy of the saprolite, so that if anybody's worried that we'll run out of ore on the west pit, we can just start shifting to a lower cost mining of the saprolite, which also exists on the Honeybugle. So whatever they end up figuring out with their Nyngan rock will likely be applicable to the other project. And when it comes time to scale this up to much higher level, because the offtake market is swelling, demand is swelling, then they could just develop Honeybugle as a larger scale operation right from the start. So on the one hand, a bad way to greet the new year, but it also kind of provides justification for spending some money on these other projects, and not just spend another year negotiating these, developing these offtake markets. This is the year where those letters of intent are in the zone, where we can expect end users to be in a position to make a decision. So for most investors and shareholders, they're thinking, okay, it's finally going to happen. We're going to have the order book filled this year. The construction financing will be ready to be raised and build this thing and be in production in a couple years. But then when you come up with some headline that says, mining lease granting under review, it makes you wonder, what are the CapEx providers going to think? It's going to have to be a lot of explanation. So it was a bit of a faceplant for the company to start the year, but until they have the order book filled with offtake agreements, they're not in a position to raise CapEx anyway. So hopefully the New South Wales Planning Department gets this solved and the company gets it solved, and this thing turns out to have been just a little tempest in a teapot.
We'll have more with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
John, Wolfden Resources kicked off the new year with a maiden 43-101 resource estimate for Picket Mountain. Is it good enough to justify going back to America?
This project is located in Maine, which is in the far northeastern corner of the United States, a fairly wooded area. In fact, Picket Mountain is in an area of forests which are basically being cut for lumber. And it has not had any mining activity for ages. But mining in Maine is now a possibility after they cleaned up their, or redid their mining code so that now you can develop an underground mine. And what Wolfden did in 2017 was as soon as this was codified, they went in and acquired the Picket Mountain project, which is an old Getty VMS deposit found in explored in the 80s and basically abandoned by the time the 90s rolled around. And there was a fair amount of work done by Getty and then Chevron, and it's a very high-grade zinc, copper, lead, silver, gold VMS deposit with zinc equivalent grades running in the 12 to 20% range. So the work that Wolfden did the past year was to go in there and re-drill some of the holes so that they can convert the old historic holes into 43-101 compliancy, and also started drilling down plunge of the west lens to bring tonnage into a resource estimate with sufficient density so that you can produce at least an inferred resource estimate. And what they came up with is about 4 million tons split between indicated and inferred, and roughly 60% in the west lens and 40% in the east lens. And this has a rock value of about $500 per ton. And recoverable, it's probably about $400 per ton. But at 4 million tons, it's not big enough for a standalone operation, which will require a flotation facility with the mill. But it meets their hurdle of a direct shipping scenario where they would mine it at about 1,000 tons per day and then truck or rail it to an existing facility. Now, there are two obvious ones out there. There is 600 kilometers to the west in upper New York State, the Empire mine owned by Titan Mining, Richard Wark's new zinc vehicle. And they are processing 13% zinc. There's no other metals in it. And they probably have 5 years of resource left at their 1,800 tons per day, and maybe more if they find more. But this would be, because there's a rail, they could truck a short distance and rail it to that mine, and then they would process it there. Now, obviously, there's not going to be much money left over for Wolfden if it does this on a tolling basis, but there's a possibility that, say, Titan Mining might down the road want to just own this outright. Another possibility is to truck it 200 kilometers to the northeast to, say, Trevali's Caribou mine, which operates at 3,000 tons per day. and it has a lower grade ore, and it has some metallurgical issues that hamper its profitability. But this would mean shipping ore across the border into Canada. So this notion of back to America is one where if the United States continues on its trend of withdrawing from the global stage and looking to be more self-sufficient, having raw materials as a domestic supply rather than something that needs to be imported from what will soon be new enemies across the sea, that becomes a strategic necessity. And this is one of the highest undeveloped VMS deposits in the world. It's at $500 rock value. It is excellent. They did that resource was done at a 9% zinc equivalent cutoff grade, but they also did one for 3% equivalent, and that came out at about 8 million tons. And the rock value at current metal prices for that is about $320. But at 8 million tons, they're close to that 10 million ton target for a standalone 2,000 ton per day operation where you have a flotation mill on the site. And so the company's now in this situation. They've achieved the hurdle of having something that somebody else might want to own and develop as a mine and just truck to their own facility. But neither of those companies is in a particularly strong position to make a deal that's a win-win or a win for Wolfden. So the next stage is to pursue expanding the resource to try and reach that standalone threshold. And the company, can continue to drill down plunge of the west lens and build tonnage higher in that way. But what they really want to do is get to 10 million tons with a high grade of 12% to 20% zinc equivalent. And one of the things that's for speculators, this is a reason it's a favorite of mine heading into 2019, is that as the team headed by Don Hoy has digitized all the historical data, put it into all their computer models and start to understand what's going on, they're realizing that this so-called footwall zone is not something separate and marginal, but may actually be a folded continuation of both the west and the east lens. And there were some old historic holes in it that had short intervals of, similar high grade, but it didn't make sense to the previous operators, so they never really followed up. And there's one hole that's still pending, for which the company knows it's got some good values over a couple of meters because they used their XRF unit to see if this is going to run anything. Of course, you need formal assays to know exactly what it runs. But they have been doing downhole geophysical probe surveys to try and see at this depth there what's going on there. Is there a conductor that we should be drilling that the previous operators did not realize was there and didn't quite understand the geometry? And unfortunately, this particular hole has filled in, so they were not able to do the downhole probe in this one, though they will go back in there and deepen it and then do the probe to give them a very good picture of what's going on at depth in the footwall zone. So we have the basic story evolving. It's sort of now we got the pounds in the ground. It clears the hurdle for development as a direct shipping scenario. They still need to do exploration to grind it up to that 10 million ton air range level where standalone development is possible. But the exciting possibility is that there may be a significant high-grade dimension to this that was not recognized because of a different interpretation of how the geometry held together. So that's something that we're waiting for in the new year. The other thing is they have about $1.5 million left, so the company will have to finance. So that's the main hurdle for the company, is to raise more money so that they can go back at this, to continue to expand it, and to follow up this footwall zone if indeed the downhole geophysical surveys say, yes, there's a very substantial target here that's worth pursuing and that could help us clear the standalone hurdle.
We'll have more with John Kaiser right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
John, Sun Metals was very busy in December trying to loose ends with regard to its Stardust project. Will Sun Metals be a star in 2019?
Sun Metals did two very important things in December. In November, they already demonstrated that the Stardust project has a new dimension of much higher grade carbonate replacement style mineralization than the Canyon Creek resource, 3 million tons of sort of $150 to $200 rock value had already been outlined from, a decade plus of $10 million spent chasing these mantle skarn zones. And the big exciting development last fall was drilling through what appears to be a fault and deeper than any drills had ever gone, and intersecting in the same hole two substantial intervals, 36.5 meters and 29 meters of very high copper, gold, silver, zinc grades in that sort of $300 to $500 per ton range. Now that's what you want for an underground mine, but the geometry is not yet understood. They've gone through what they think is a fault. They're in deeper than they've been before. There's lots of limestone there, so there's lots of potential running room. But did they manage to drill some tabular zone on the end and get 50, 60 meters of very high-grade mineralization? And when you step away from it, you get nothing. We do not yet know that. And the company hopes to solve this problem in the new year with a special type of precision drilling where they can drill a pilot hole and then do these holes that almost like wedge drilling that can drill at different angles and start probing around this original discovery hole and start seeing in what direction the mineralization goes. Now, the two important developments were, one, this project had an unusual deal with Lorraine Copper where when they vested by having spent $6 million, they would get 100%, but they needed to issue enough shares to give Lorraine Copper 30% of the existing shares issued. But they also needed to raise money to continue drilling because they only had $1.5 million or so left, and that really isn't enough to kick off drilling what's going to be a major deep delineation drilling program. And so the first thing they did was sit down with Lorraine Copper and work out an amendment to the deal which fixes the number of shares that they will have to issue at 31 million shares. Then the next thing they did was do a financing, $5.1 million, and they did it with the Pear Tree Charity Group. And what they do is people who are looking to reduce their taxes put up say $5.1 million. They get the flow-through credits. They then donate it to a charity, and basically Canada's got this lovely double-dipping thing where then they get to write off the value of this donation 100%. So all these taxes, tax savings end up being very, very lucrative for these participants. But the problem always for the company is, well, who ends up with this stock? Do they blow it out for whatever they can get and, tank the market? Well, in this case, the really important thing that happens is that Teck Resources, which is a company that can be very difficult to deal with juniors because it tends to over-optimize its relationship with the junior. It isn't always a win-win. They showed up and bought that financing. They paid about $3.5 million, but $5.1 million ended up in the Treasury. So the company's now fixed up with $7 million to head into the season. They think they'll be ready to start late April, early May, a lot earlier than last year because they now know exactly what it is that they need to do. And this is the fact that Teck, which has been watching this, would step up and put money in for a stake that doesn't give it any say in the future, and really it's not one of those any future financings we get to maintain 19.9%. This is a significant endorsement, especially given concern that maybe this thing is some lucky down dip thing that they hit and it's really not much there. But the context of this Stardust play suggests that this is a very, very big system that's had a lot of fluid flow in it, and of course they're usually driven by some sort of a porphyry intrusion, and the skarn type mineralization forms on the peripheries. There could be a lot going on here, but now after spending the year drilling various targets around the Glover Stock and not finding much to the north and to the west where they were hoping to establish that hub and spoke scenario that you often get. They're now focused in the area beneath the Canyon Creek skarn, where they already have their 3 million ounces. They've now got a target at more than twice the grade, and the widths are more substantial, and it remains to be confirmed that these are true widths. And this is one of the more exciting plays heading into 2019 that Discovery Watch people should give a close eye on, and which is why Sun Metals is one of my new favorites for 2019.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.